Episode of the Levers Pod. I'm here with Tej. Once again, we are sans crisp, but hopefully he'll be back on the next one. But yeah, we're just gonna have a similar episode as we did last time, where we just kind of talk about some happenings in the crypto market, give you our thoughts and analysis, and just a little bants about whatever comes up.
Honestly, I'm growing so bullish on us. I think we should just fork the Levers Pod, and definitely.
Yeah, Levers Classic. It will be the one that's not working. There's no more episodes anymore.
Yes, Levers Classic. Chris will be the only one validating Levers Classic.
Yeah. Yeah, dude. So, where do you want to start?
Let's just start with what you got. I guess let's dig into Luna Meltdown.
Yeah, dude. So since the last time we talked, I think this is probably the biggest event that's happened in crypto. And so, I know we have some listeners who maybe aren't as deep in crypto as we are. So basically, Terra Luna was a blockchain. You could think of it as like an Ethereum competitor, and we'll get into kind of the mechanics of it. But basically, it appears that someone kind of staged like a financial attack on the network, and like kind of exploited it in a way, and shorted it, and like the whole network melted down. So this asset that was in the top 10 went from $60 to literally zero within a couple days.
Got up to 80,
and it was 80
Friday, and then by Sunday it was under a cent or whatever.
Yeah, here, let me pull up a chart for dramatic effect. But pretty shocking thing to the whole crypto market. I mean, just it was like from people who I talked to who've been in crypto longer than me, for a lot of them it was the craziest thing they ever saw. Oh wow, is it back at $6 now? 6.4. Oh, that must be the Luna 2.0.
Yeah. They launched a new Ponzi.
Yeah. But let me pull this up for people. Yeah, here we go. So crazy looking, dude. Yeah, dude. So here's the chart. And this thing was basically went from what? Yeah. Around 60, 70, whatever, around $80 when it started, and down to literally $0. Along with that, it took down a lot of the other parts of the crypto market, and there's a lot of kind of fear around the broader effects, because Luna, again, for those who don't know, part of their whole design of the protocol, it's paired with a stable coin. And so a stable coin is something that's supposed to be pegged to a fiat currency. So there's there's dozens of these. There's USDC, there's Tether, and they had UST, United States Terra dollars, and it was algorithmically pegged to the US dollar. There's been, I think stable coins has been one of the things that the SEC has mentioned, like by name, at least a few times, as something that they're looking at, or that they are going to make more regulation for. And then this happened where it was marketed as a savings account with 18% APY, and I was even using it at one point. We can talk about that. That talking with you is kind of what got me out of there.
Was it Shake? Was it FDIC insured that you're depositing?
Yeah, no, it wasn't. So everyone got fucked. Billions of dollars basically, evaporated out of the market, and a lot of it just from like normal, there's smart money people, like institutions. A lot of people were invested in this thing, and then just a lot of like people with probably 4-figure net worth who are putting their savings in there. When the stablecoin got depegged as well. So pretty crazy shit, man. What are your thoughts? I mean, you also, I'll mention TJ worked for like a competitor, you could say, I guess. It's kind of in the same business with like decentralized stablecoin. So what are your thoughts?
My thoughts are twofold. I think one, we've got sort of we've got more of a consensus, I think, around the algorithmic stablecoin space, and specifically under collateralized stablecoins, right? The idea here is with Luna, you basically have two assets, UST being the stable asset and Luna being the risk asset. And you're supposed to be able to exchange $1 of Luna for $1 of UST. And so that should sort of algorithmically keep the peg in order, if you believe in the system, which obviously didn't happen in the end. But the collateral that sort of backs the UST peg is this risk asset called Luna. And it's backed 1-to-1, which means there's no additional cushion above it. So it's under collateralized, 100% over collateralization ratio, or 100% collateralization ratio, rather. Other stablecoins have taken a more conservative approach, like DAI, which is the native stablecoin of MakerDAO, a protocol that I contribute to. And the deal there is DAI stablecoin, also pegged to the dollar, is over collateralized, meaning the collateral the protocol accepts, whether it's Ethereum, whether it's wrapped Bitcoin, whether it's a real world asset, you're going to have to lock up $100 of collateral to borrow something like $60 or $65 worth of DAI. And the premise there is you're giving yourself more of a cushion such that the stablecoin can survive more volatile market conditions. So I think, coming back to Luna, I think the idea of an under or uncollateralized algorithmic stablecoin was kind of ripped to shreds in that moment. There will be other experiments that will take a similar approach. There will be experiments that take a hybrid approach between algorithmic and sort of over collateralized. There's a protocol called Frax, which is fractionally reserved. A portion of it is algorithmic, and the remaining portion is backed by legitimate crypto collateral like DAI and ETH. But I think that extreme side of the petri dish of stablecoins has been dented significantly. I think the other piece, and Sheikh, you mentioned it, is a lot of decent people, mom and pops, lost a lot of money because they were using Anchor as effectively a savings account, right? That was clipping 17-18% a year, and it was working well for a while. And people lost, their livelihoods, especially people, a bunch of folks in Korea and Southeast Asia who regarded kind of Do Kwon as this, visionary character who would shepherd their money to kind of the promised land, and then overnight it got rugged. And so I think if before the regulators were, mildly interested in our space, maybe annoyed, now I think in a lot of ways in the U.S. certainly, but it's now like it's a requirement for regulators to step in because now it's an issue of consumer protection. So I would say those two things are kind of the takeaways for me. I mean, the third one is, this moment makes it really obvious for the market that the kind of slow, conservative way that Maker does things with DAI is actually really quite beautiful and quite excellent. Right? It doesn't grow quite as quickly, but it can weather the storm. And ultimately, what do you want out of your stablecoin? You want it to be pegged to the dollar, and you want it to continue to be there, continue living. The only way you do that through the volatile market conditions that happen in crypto is to underwrite collateral conservatively and make sure you can maintain the peg.
Well said. Yeah. I think it could be interesting to kind of dive into a couple examples of other ones like you already started to do. But yeah, that's the key. I mean, that's the key difference, right? Is under collateralized or over collateralized. And it's funny. I remember watching that video like way back when I first learned about Luna, and I remember thinking like, man, this just seems like because I didn't fully understand it at the time, but I was like, this just seems weird. Like, how is this possible? And basically, what I've been thinking about is like, I saw Jordy Alexander tweet about this, but like UST, it was really based on like people had to have confidence in it. It like required confidence.
Yes.
And the leader of Luna, the guy who created Luna, Do Kwon, you can kind of attribute some of his actions to that fact, because this guy was like, in hindsight, it was a ton of red flags from Do Kwon, but this guy was like making public bets in like upwards of, $10 million on the price of Luna, like a year from now. And he would just shit talk people online, and people who said they were shorting Luna, he would like go in their comments on Twitter and like talk shit to them and call them like, names and shit, call them poor and like all types of crazy shit. And when I saw Jordy Alexander tweet, was like, he doesn't think that Do Kwon's actually that bad of a guy. And that if you look back at some of his behavior, it's because he knew that he needed to like do these, like do to his best ability, put confidence in people that UST was real, because by the mechanism of it, if people like hold UST and as savings and kind of like a safe coin in crypto, like, okay, this is worth $1, you're not really like trading in and out of between stable coins most of the time. It's kind of like, okay, you have your stable coin, it's worth $1. And if people believe that about UST and didn't swap it into another stable coin, then it would remain more stable. But if like when there's moments where people lose faith, that alone can kind of cause like the death spiral where it starts to trend towards zero. I thought that was pretty interesting, is just to think of it as kind of like a confidence-backed stablecoin,
Yeah.
And then they had started moving to the thing that I think is interesting, is that they had started moving to a partial backing of Bitcoin. So they had raised capital in Bitcoin, and that was being used to defend the peg. So it was kind of this like backstop outside of it, the Ponzinomics, where they had like a different type of collateral to back it. But I think it was only 20% backed by Bitcoin, something like that.
Three and a half billion or so.
Yeah.
But I think that's actually a really interesting thing that you brought up there at the end, which is, as Luna continued to chart its path, the Luna Foundation Guard, the entity that governs the whole system, was moving towards a collateralized model, right? Mm-hmm. So already it was recognized that in the limit, there's something unsustainable about this, and we should bring collateral into the backing. So you saw already a sort of merging of this extreme side of the stablecoin industry, right? Algo uncollateralized to non-algo collateralized, and they were sort of moving towards one another, right? Even Maker right now, you're seeing it converge back towards this middle ground. So we're looking at a few options where, we're going to lend not over collateralized. We're looking at a variety of partner sort of platforms that are basically these pools that lend uncollateralized, unsecured to real world borrowers, right? And so part of our lending base will be more like Luna. And Luna was moving to a place that was more like Maker, right? And so this is the thing with markets, right? Markets experiment and they move around and they come to some sort of global optimum, right? Which is the right compromise between different things. I think it's absolutely fascinating to see it play out. And like we mentioned before, Frax kind of sitting somewhere right in the middle, younger than Maker, a bit more risk on, and a combination of an over collateralized and an algo model. What I'll also say is, like you're thinking about confidence is pretty interesting too, right? But I always find it's funny when people look at like an innovation or a company that fails, right? And they're like, oh, it was a scheme the whole time. It was a confidence game the whole time. The entrepreneur was lying, bold-faced lying. This is what he had to do to make it work. But it's like, ultimately, I feel like that all lies on a spectrum too, right? Every entrepreneur has to sell something that doesn't yet exist. He or she is incentivized to push a narrative, because if no one believes that narrative, then you're not going to raise your next round. If the consumers don't believe that narrative, then no one's going to take a flyer on your product, right? And so it's all about like, where's the point at which you look at someone weaving a narrative that's different than reality today and say that person is a bad actor rather than that person's a visionary, right? Like think about Elon, right? Like Elon succeeds because he has irrational conviction in his own ability to execute against all reasonable odds. So by definition, every time he describes his business or what he intends to do, he is telling what is probably a lie every single time. But if you look back, right, in hindsight, now that Elon's changed humanity, you're like, oh, it's all good, right? But Do Kwon and Elizabeth Holmes are villains, right? Because they never created a product that's stuck. So I think it's like people like to look at these things like they're black or they're white, right? But I think ultimately, yes, Do Kwon built his empire on some faulty premises, but he also sort of did what needed to be done to try to help his thing succeed.
Yeah, I think that's really well said. And you're the first person I heard who compared it to Theranos, which I thought was interesting. It's kind of like, how much can you, like, how long can you keep this kind of confidence game going until there's enough real like substance there with a product? And to be fair, I think they did have some interesting products like already, but the products that they had did not at all justify the valuation.
Right.
And we've talked about it on other episodes, like the payment service they had, Chai. I was actually wondering, I mean, it's not really that funny, but I was wondering like what the fuck happened to those people, they use it for like e-commerce and stuff. But they had that, they had, Mirror, they had the synthetic assets thing. And I mean, they had Anchor, but Anchor was, again, that was kind of the confidence game. But yeah, they had some, there was definitely promise to it. And so, but I think it's, I think on another note, it like the broader effects haven't been realized yet. And like, it's one of those things where 2 years from now, we could look back and go, oh my God, like we're, look at all this, the regulation that we have around lending and stable coins and yields now because of this Luna collapse. And I could see like, yeah, I could see a world where that, where we look back at it like, and there's a lot bigger effects than just people losing the money from the coin.
Agreed.
Along those lines, one other thing I wanted to touch on with Luna, so that was really interesting. Well, here, let me tweet out this link first. Sorry, 1 second. Yeah, so another thing I wanted to talk about was how there's a lot of speculation around how this was kind of a premeditated financial attack, which I mentioned at the beginning of the episode. But this is a good thread. I'll put this in the description too. But this thread, they break down how somebody could have coordinated this attack. And there's, because we're dealing with public blockchains, there is some data to show that it was, a premeditated attack. And part of it was somebody got a bunch of UST, the Terra stablecoin. They got a $1 billion position, and then they began to sell it into the liquidity pool, into other stable coins, which basically before the whole meltdown started, someone had already kind of like consciously closed the exit door, and they'd already started to this was kind of what started the depegging. But basically you can see here, they dumped $350 million into Curve to drain the liquidity. And hypothetically, they could have shorted Luna or shorted Bitcoin or both. And that's where they would have made the money. So this guy kind of outlines this attack and like how if you had access to billions of dollars of capital and like leverage, you could have made around $800 million doing this, which is like just crazy. And it could have been more. I mean, hypothetically, this person could have shorted everything because crypto markets are so highly correlated that when Bitcoin goes down and everything goes down. So I don't know. It's pretty crazy. Have you seen this thread this guy wrote?
Yeah, I did read the thread, and just the analogy for people, the obvious analogy is to that of George Soros, who's a legendary financier who broke the Bank of England. That's what he's known for. Basically, he saw a weakness in the Great British Pound's peg to the Deutsche Mark. He saw fundamental weakness. And in order to bet on that fundamental weakness, he borrowed as much GBP as he could possibly get his hands on and sold it short. And so what this is basically doing, right, is you recognize a weakness in the market, but then by virtue of your bet, you actually accelerate that weakness, right? So Soros saw the weakness, borrowed the GBP, sold the GBP, which made GBP even weaker. The peg broke. He covered his position and profited. This is sort of like the Soros equivalent of, crypto.
Yeah. Yeah. And just my opinion is that, whoever did this, if someone did make this like alleged attack, which a lot of sites point to that, whoever did it, I feel like it's unlikely that they're a crypto native person, because if you're a crypto native, investor, if you run a fund, even if you run a competitor to Luna, I still think it's, negative sum or whatever. It's like net negative to do this attack for all of crypto.
What? You mean because your other positions stand to lose more than you'd gain on the short?
Yeah, I mean, so partly that, but again, I think they could have, if they were just net short, they could have made money no matter what, right? But like more so that I think that this is going to be this like incident that regulators point to and like use it as evidence to cuck like all types of innovation, basically.
Yeah, I feel like though the most likely character to have done this, if they are in fact crypto native, is just kind of like one of these market makers or arbitrageurs, right? They don't ultimately give a fuck about any innovation, or they don't take directional risk, right? So I don't know, they see an opportunity, a big opportunity, and the way these guys kind of operate is, I mean, not really the market makers or the arbitrageurs, but if you're like a delta neutral fund and you're just sort of agnostic to what's happening in the market, whether it's like some innovation, some like genuine productive activity that entrepreneurs are building, or like which direction the market's going. I feel like you see this opportunity, you arbit, and then whatever happens, even if regulations come along. Like, I don't imagine like someone like Alameda or Jump is really going to have to deal with that much. As long as crypto lives, I feel like these vol shops do fine, right?
Yeah, but I think like also Jump and Alameda both have a lot of like early stage investment stuff, right? Like they're definitely,
That's true.
They're definitely net long crypto, I would imagine. At least it seems like they are. And then like the other side of it is, I think even if you're just, like if you just are profiting on the volatility or volume, I mean, like there'd be more volume if you get more adoption, right? Like, so even then you want, like, that's, I don't know. It's just my opinion, but
like
you're right. I mean, you can make $1 billion and then like just fuck off, It's like who really cares?
Soros literally, he made billions of dollars on that one trade. Like that's the trade that made his name, and then he's done, right? Like ultimately, whatever happens after that, it's kind of like,
yeah, exactly. That's the devil's advocate. Is just like you make 800 mil and then fuck off. Like, why do you even care about the future of anything?
Yeah, exactly.
Yeah.
Also, one interesting snare in all this, because you have this hunch that it's not someone who's crypto native, which I don't know if I agree with, but let's just go with it. So in the case it were someone like a huge TradFi or crossover shop. So I don't know if people noticed, but Paradigm has been chirping about the unsustainability of Luna for a very long time, right? Like Hasu has always hated Luna, and Hasu does research at Paradigm. So Paradigm is anti-Luna. Not only they're anti-Luna, but they're sophisticated enough to know why specifically they're anti-Luna and how one could go about effectively shorting Luna. Paradigm also invested a whole bunch of money back in maybe a year ago in Citadel, right? So I wonder if Citadel and their cronies were involved, and it was not maybe informed by some decent research by our good friends over at Paradigm.
Oh, that's
it's extremely,
I can see that too. I mean,
extremely unlikely, but something a trickle of coincidences I noticed.
Yeah, that's a good point. I mean, and the other thing is that it seems like a crypto native fund would notice this sooner than others. It would be weird to me that I don't know. Anything's possible. It's just all speculation. But yeah, that's it. Another funny coincidence is like Justin Sun with Tron they're doing an algo stable that's pegged with Tron, whatever, same kind of thing, 20%. Maybe they're doing 30% interest or something. And like around the time when this OTC transaction happened, Justin Sun tweeted, "Oh, just bought a bunch of UST. Like, we're planning something big." So it's like could completely be a coincidence, but that's a crypto native person who like has, who said that they bought UST, and that guy's multi-billionaire. Like he could potentially do this. I think he's a multi-billionaire, but yeah, I mean it's interesting. Like there's. I don't think we'll ever figure out who it was for certain, but
I feel like this also, this maneuver, like this takes a pretty big sack of balls. There's only so many characters that would even attempt this. I feel like Justin Sun is just like contrarian and ballsy enough that if he had the capital, it could just well be him. I mean, there's like a handful of characters in the world that could have done this.
Yeah, it's a good point too. Like even if you knew this, you had the capital, you saw this, and you had the capital, there's still few people that would like just psychologically have the fucking balls to do it.
Yeah.
It's a really good point. It's kind of like, I don't know, it's fun to think about this because it's I mean, I don't know, it's just like fascinating, it's just fascinating to think about that, how this happened to me, and that somebody made all this money and fucked so many people over. But it's kind of like, that's just that's crypto. It's kind of that's the free market. You're allowed to do that.
Exactly.
And there's something kind of like that. There's something I love about that somebody could do this, and it kind of takes out weak links in the chain. No pun intended. But you want to move on to the next topic? I forget what I had here. Oh yeah, Optimism. So I meant to research this a little bit more, but yeah. So Optimism is a layer 2. It's an Ethereum layer 2 that's supposed to help Ethereum scale. And for a while, people have speculated there's going to be an airdrop of their token for users of the network. And then they did this airdrop last week, I think, and a lot of people started selling the coin like right upon getting it. And I forget where it came from exactly, but there's been talks from, in these governance forums about people saying that the people who did sell it, because you can obviously see all this stuff on chain, the people who did sell it should be punished, like from getting future airdrops and things like that. Like you should save their addresses and like blacklist their addresses. And it's been pretty entertaining to watch Kobe like kind of banter with these guys about it. I don't know if you know anything more than I do. I really don't know that much about it.
I don't really either. And I also, avoid things that don't pump my bags, and I didn't get any, so I don't care.
Yeah. It's, let me see if I can find where the original post was real quick. Yeah. Okay. So it's just some guy posted this on the governance thing. Users who sold their initial airdrop should become ineligible for all future airdrops.
Jake, we have a maker delegate on. My friend Kianga is watching our live stream.
Oh, awesome! What up, Kianga? But yeah, so yeah, so here you go. Somebody proposed this, and there's been a lot of discussion around them. It's just funny because it's somewhat against the ethos of blockchain, being permissionless.
Isn't the premise of this Optimism airdrop was in many ways a first of its kind, right? I mean, they looked back at historical airdrops to see what was done incorrectly and who should in fact be rewarded and how they would do the snapshot, and basically built an airdrop machine that tried to align incentives more tightly for airdrops going forward. Like, isn't the idea this should be sort of a gold standard going forward?
I didn't realize that, but
I think they even called it Optimism airdrop. Maybe it's not Optimism. Maybe I'm thinking about something else.
Might be thinking of
Yeah, but like
the
you know what?
Evmos, the Evmos one. I know that was supposed to be kind of like
No,
revolutionary.
I don't think it was Atmos. I thought it was Optimism.
But like the idea is right. Like we have this primitive in crypto, which is like the airdrop, right? In order to distribute value to your community, but ultimately the idea of an airdrop should be to distribute a value to those who actually used your protocol. You know, not
Mhm.
just for the reason of the airdrop, but like had organic demand for the protocol, and B, you want to give the value to those most likely to enhance the protocol's value in the future, right? And so that's like a very compound thing to try to map out, but it's not so simple as, you know, let's just give X amount to wallets that use the thing at some point, right? Like you would imagine there is a decent methodology to figuring out what that equation is, and I'm pretty sure Optimism has like put like a few more levels of effort into their methodology than like people have historically.
Yeah, yeah. I mean, so you can see here. So one of my wallets I claimed from, and they have some of this criteria. Well, here we can even check, but it's priced out of Ethereum, DAO voter, multi-sig signer, donated to Gitcoin grants,
Yeah.
Optimism user, repeat Optimism user. So yeah, you're right. I mean, there's there's definitely more to it than just, you know, this wallet interacted with the protocol before this date.
Right.
Funny enough, I didn't know that this wallet, I have used Optimism multiple times trying to get the airdrop, and I didn't even show up there, but I don't know what that's about. But yeah, I mean, you're right. And I think like the interesting thing about it is just to think about like airdrops in general. Do they incentivize the right behavior? Because, you know, it was pretty well televised, I think, on like crypto Twitter, that, you know, if you were really grinding the airdrop games over the past year, you could have made like $50,000 to $100,000, you know, if you got every single one of these big airdrops. And you know, it kind of begs the question, like, what's the point of this? Are you just paying people to try your protocol in hopes that they'll be a repeat user? You know, it's, I don't know, it's interesting because, but like with this, when like Kobe's saying selling isn't dissenting, and I think if, yeah, I think this idea of like, if you're looking at it as user acquisition, it would make sense that people sell it, right? Like they want to realize the gains and like get paid for the testing or you know, use or whatever. But I think there's a lot. I think different people have different opinions about what the point of an airdrop is. I guess that's what I'm getting at.
Yeah, yeah. I mean, to me, one of like the fundamental beauties for the potential of crypto is the fact that you can have users and owners be the same people, right? Like you have this ability to distribute equity to those most likely to enhance the value of your protocol. So to me, like this whole idea that, you know, it's purely for user acquisition and has nothing to do with retention or growth is like a little bit short-sighted. I mean, it is what it is, I suppose. But if it's just for user acquisition, then you shouldn't be paying them in the native token because it's dilutive. You should be paying them in stables or something else, right? Something less valuable, something that's just cash. Like the reason that like Helium and Chainlink and, you know, all these guys are using a native token is because I think this idea that if all of the different participants in a network are converged on this common monetary unit that can increase in value, there is a structure whereby you can distribute that value to those most likely to enhance the network. And if you're not doing that, to me, it's a big missed opportunity.
Yeah. Yeah. You know, and like, to me, if you're looking at the use case of user acquisition, that's like, it's pretty normal to do that in Web 2, you know, like, I mean, that's a cost that every tech company like has, not even just tech companies, but any company like thinks about that, you know. What's I forget the whatever the acronym for it, but like, yeah, it's yeah, there's a cost of user acquisition.
You're talking about like LTV CAC ratio?
Is that a real thing? It's something like some business term like that.
So it's like you want to measure like what is your lifetime customer value, like what's your revenue per customer, and then what's the cost to acquire them. And obviously, the higher that is, the better off you are. So I think
Right.
like the CAC, the customer acquisition cost, is kind of
That,
what you're referring.
that's what I'm thinking of.
I think the point is good. Like people also shit on crypto for unsustainable like user acquisition costs, but then you look at Uber, right, and it's been non-profitable for a billion years because they subsidize all the rides, right? If you look into the legal history of Uber, what they wanted, but the regulators wouldn't allow them to do, is they wanted to distribute equity to their drivers for this
Really?
they wanted to, but
that's fascinating, dude. I didn't know that.
I think there was one other gig economy or sharing economy, whatever you want to call it, company that tried to do that. There's a document somewhere, but yeah, like they recognize that there's some juice to that idea, right? Like sharing the equity with more than just the owners and the employees, like it sets off this flywheel loop, right? And so I think it's a shame, like we've got this beautiful thing, which is an airdrop. Like you can take a snapshot, you can measure a behavior, and you can reward that behavior. And what you want to do is you want that token to be in the hands of those that are going to enhance the network. But we got this beautiful thing. I think we just need to build out like the brain, the methodology behind exactly who should get those tokens, because it certainly has not been cracked yet.
Yeah, dude. That's so cool about Uber. I did not realize that. I think it's just, it's like an ongoing experiment, and we'll see. but this idea that like I don't know. I haven't read all these proposals, but like my understanding of it from reading Kobe's tweets was like that a lot of the people who were Optimism users sold the tokens, who qualified as users and got the tokens, sold the tokens too. And so you were kind of like punishing the majority of the people who use your thing, So it's like, that's why I think, I don't know. I guess, but I can see it from both sides too, because you're, I don't know. It's a complicated issue, but it'll be, I'm curious to see how things evolve with the airdrops going forward. I mean, I think it's a really, like you said, at the core, just like being able to share equity with the users is a really interesting concept. And like, I think it's one of the things that like excites me the most about crypto is that, users are also shareholders, or they can be. Yeah. But it's clearly like it's kind of still early in the sense of like figuring out how to incentivize that.
One more thing I'll say is I'm understanding with Optimism, and correct me if I'm wrong, but that there's going to be multiple tiers of these things. Is that right?
Yeah.
I mean, not tiers is the wrong word. Stages.
Yeah.
So like, I think that already an improvement, right? Because historically you've had this one and done airdrop that, at this time, this is the snapshot. The snapshot takes these few behaviors, logs them, and then distributes the entire airdrop allocation one time. And the problem is then you're done with that incentivization mechanism, right? The rest of the tokens are reserved for something else. At this point in time, the protocol continues to evolve, right? The user base changes, the core of the product changes, governance changes, things change. And so I think the fact that Optimism is like, yeah, we're not going to be so arrogant as to think that like right now we take the snapshot is like, we have all the knowledge in the world to deliver all of the airdrop tokens to the exact users that we know are going to enhance the brand over the long term. It's right. It's like we have some facts today about what we think would be best for the structure. And we're going to airdrop some tokens. And then in a year, we'll look back and we'll restructure the methodology for the next airdrop as our protocol most needs, right? And then they can continue to evolve and adapt. I feel like that in and of itself, like an additional level of humility and dynamism in the airdrop is already like a huge upgrade to me.
Yeah, I agree. It's really well said. Yeah, because I mean, yeah, and there's so many things you could say. Like, I mean, you don't. At the end of the day, you don't know who the best people are right now. What are you going to base it on? Because the network is so early in its like lifespan, and maybe that, you could argue just that the people that want to participate in governance will buy the token and participate in governance. Like, and maybe just giving it to the users is like the best possible proxy, because the people that are, there's a highly likely like a big overlap, but then there's obviously like a lot of mercenary capital. And the other thing to think about is that like all markets are just complete shit right now. So like if you give someone like $1,000 for free, and like you're like, why are you surprised that they're selling it?
They're selling it. They're selling it so they can go buy fucking gas in the real world.
yeah. It's like, why is that so bad? So I don't know.
One more thing that what you just said made me think of is you have another like interesting dynamic in the evolution of airdrops as like a primitive, because at some early point, like early in our crypto days, like no one expected airdrops, right? It was just something that arrived in your wallet and you're like, whoa, this is sick. I get rewarded after the fact for using protocols, right? And as that happened more and more so, people, oh, I see. And so the mercenary capital came out, right? Because it knew as long as I use this protocol, not meaningfully, but I sort of attack it, right? I fiddle around on it. Then I'll get what I need to get. And now it's perversely incentivized, right? And now we're getting to the stage where the airdrop mechanism has been built into market participants' behavior. And so you don't just get utility users, you get speculative users. And now we have to outthink that, right? Like we have to outthink that evolution. So initially it was sort of a beautiful thing, but the market learns and it adapts. And now I think the protocols have to adapt to the market adapting. I mean, it's honestly, it's like a constant evolutionary battle. It's like a red queen between like the airdrop mechanisms and the mercenary capital,
Yeah. It's funny too. I've actually been thinking about this with my NFT project, because we're designing this thing where we're going to like have a way, it's basically like a CRM. And we're going to have data on like how many NFTs each wallet has and how long they've been holding these NFTs. And like the hope is that, I mean, I know this data will be useful, but it's kind of just one dimension. It's like, is that the behavior you want to hold, or you want to reward is just people not selling it? Or, are there more nuanced behaviors like contributions to the project, which
interesting.
There's a parallel with optimism here, where it's like, just because someone is like rich and has a lot of the token and hasn't sold it, does that mean that they're like, is that the behavior you want to reward? I don't know. I've been thinking about this a lot with Cyber Samurai, but
that's very interesting. It reminds me of, last night I was at this drinks thing thrown by Gradient Ventures, and I met this dude who's building a on-chain credit bureau, effectively. I don't know if you've heard of it, but like there's a few of these goblins popping up.
What's it called? Say it again.
His is called Spectral Fi. And it's sort of a competitor to Teller. And the idea with these protocols is like you've got all this financial activity on chain, right? That you can query pretty easily. It's all lives in distributed ledgers. But how do we take user behavior and synthesize it down to user creditworthiness? So kind of like what you're saying, like we know what all these holders are doing on chain. We can like see these things, but how do we translate those things into a signal that allows us them to like reward them or to understand them better as a user? So when we launch new products, we can customize those products to them. Like there's information to be had. And so what these guys are trying to do is they're like, all right, people are using these DeFi protocols. They have a length of history on chain. They either use a lot of DeFi protocols and are, borrowing from Fuse pools and Maker and Compound and Aave, or they're not really doing that much. And when they open their leverage positions, do they tend to lever them up to the tits? Or when market conditions change, do they tend to top up their vaults, right? Like all these things have signal in them about a user's creditworthiness. And someone's going to crack that code, right? And at Maker, what would be incredible is to bring that on-chain data about the creditworthiness of a user and build that into the products that we can offer, right? So for right now, we have all these over-collateralized products, which is great. It's safe, but it's very discrete as opposed to dynamic. Like you put $100 of BTC, whoever you are, you're borrowing 65 DAI, right? That doesn't make sense. That's very much like the structure of the vaults and the structure of the lending. It is a function of the liquidity characteristics of the collateral, right? Like BTC is Lindy, it's been around, it tends to trade a bunch. If we need to close out this vault, we know we can sell it. But what needs to be the case is, as a user approaches the protocol, we need not be underwriting the user for solely their collateral. We need a more interesting picture that also incorporates their ability to repay as a user. So these guys at Spectral, they're like, well, if someone has had a wallet that's been active since 2014 rather than 2020, that probably has signal. If someone's using 10 DeFi protocols, that probably has signal. If someone tends to top up their maker vault every time ETH dips, that probably has signal, right? And so then you can sort of feed, you have an additional oracle layer to the maker vaults or the compound vaults or whatever, and you add resolution to the capital markets, which is just, honestly, it's just so fucking cool, you know?
Yeah, dude, I agree. I mean, this is it's one of the like, it's one of the promising frontiers in DeFi. You know, there's a project on Solana that's looking at doing the same thing where they're under collateralized lending, and it's just, when you think about it compared to the real world, like, no, very few people do over collateralized loans. Like, it's just like totally capital inefficient. And so, yeah, I mean, it's exciting when you think about if someone's able to pull this off. And like, yeah.
Also, dude, for like, for young people, like, part of the issue for young people being able to like buy homes or like afford assets or just like become a literate financial society is like, you need to get your credit score up, right? And it's sort of like it's like a chicken and the egg. Like, I can't get my credit score going until I have access to credit, and I have a nice history of credit, but I can't get a history of credit until I can get a credit card. It's just kind of idiotic, right? But like, many of us have crypto assets, and we have like this on-chain track record that none of like our boomer counterparts do, right?
Yeah.
And so at some point, like, that financial architecture is going to be built out that gives us credit for shit like that. And other people aren't going to have that. And so we're going to have access to stuff on chain, capital markets on chain, that people off chain won't have access to.
Yeah, dude. I never thought about that. It's really interesting.
Yeah, dude. I mean, I feel like it's only during bear markets where we end up talking about actual innovations, but
yeah. Well, I mean, you kind of have to, you get like, everything gets stripped away, and you're
nothing left.
Yeah, you're like, yeah, dude. I mean, I was just talking about this in Discord, how like my best performing tokens during the bull market are my worst performing ones during the bear market, mainly Jewel and Luna. It's like the ones that I made the most money on are the ones that basically I lost everything during the bear market, went to zero. But it's like, it's healthy, I think. And in the long run, it'll make things stronger. I'm hopeful,
What do you feel like is the I don't know, like, what do you think like defines where we're at today? Like what are the defining things of this bear market? Like, when we look back on it, I don't know, like, maybe it goes another 6 months or a year, whatever, but like, we've been in it patently for 6 months now. Mm-hmm. November was the peak when we were at break point, naturally. But now we're here. So like, what do you think are the events or like the themes that caricature the last 6 months? It's a big question, and I don't have an answer, so sorry to jam you up.
No, I mean, definitely Luna is one of the things that I think like we'll remember. But other than that, I'm not 100% sure. I mean,
Terra knows.
Yeah. What I looking forward, what I'm like hopeful will define this bear market is gaming stuff. Like, I just think that a lot of gaming projects are starting to get close to release or have released. And I think that like, that to me is still the most promising part of crypto, where I could see in a bear market. I mean, we already have seen it with like Axie back in last summer, and then Steppen more recently. even though both collapsed, like they did have moments of decoupling and like really bullish, just really good like token performance with price while everything else was declining.
Yeah.
And so that's what I'm hopeful looking forward that over the next, year, there'll be real innovation and real value in the gaming sector of crypto.
Which games are you most bullish on?
Dude, I don't even really know. I mean, there's a lot that I hold and a lot that I'm looking at, but it's hard to say. It's hard to say what I'm most bullish on. I mean, honestly, Aurora, I've been meaning to look at it since I've been getting back to work, but Aurora has.
I've been impressed. I feel like every few weeks or so, I see something substantial from Aurora demonstrating progress in the game on Twitter. I mean, I haven't looked at any, but it seems to me like where in the bear market, a lot of these frothy games, the devs kind of just go to sleep or they go on vacation. Seems like Aurora is building.
Yeah, exactly. I mean, the thing is with the crypto games is like there's kind of like two sides to it, or two like categories in my opinion. There's like these like crypto native Ponzi-nomic games that's like DeFi Kingdoms, and then there's a bunch of other ones that are like that, and then there's things that are like trying to be a fun game and capture the entertainment value, which is what's more interesting to me. And like nothing has done that yet, though. Nothing's even come close. But I think Aurora. So yeah, they released this. It's like you have and run your little guy around or whatever. And I'm pretty sure if you have, actually here we can even check. I think if you have a what's it called? If you have one in your wallet, I think I have one in this wallet. It'll show the actual character, maybe. Maybe not. I don't know. But yeah, I think I don't know. We'll see. But Aurora's one that I have my eye on. There's one that's kind of like a crypto native game, I would call it, which is called Remnants. So it's kind of has like some Ponzi. It's kind of like an idle staking type game, but the team has really impressed me so far, and like their ability to, execute. That's one that I think is promising. There's another one called Catch King that I'm invested in. That's on Solana. Yeah, those are the main ones I'd say. There's Portals. That's more metaverse, but Portals has a working product. And I think it's pretty good.
Portals seems legit. Also, I know you don't traffic much in Ethereum games, but Illuvium's looking pretty tight, I will say.
Yeah, I haven't looked into it too much, but I have seen some trailers and stuff of it.
Also, I'm so bullish on the underlying competitive dynamics across the Warwick brothers. Canaan Synthetics, it's his brother that's building Illuvium.
Right.
They're apparently hyper competitive. So obviously just a fantastic dynamic to have under your bags.
Yeah. That's a really good point.
Yeah, Shake, I got a cruise. I've got a hard stop in a minute. You got anything else?
No, dude. I think this was a good one.
All right, brother, man. Beauty.
All right, bro. Talk to you later. Thanks everyone for tuning in.
Thank you.